what you're looking for is you're looking for who and why. So the biggest thing is, the two biggest groups of renters right now are millennials and Gen Z, right? For obvious reasons, because buying a house right now for first-time home buyers is extremely challenging. Welcome to the Cash Flow Chronicles. I'm your host, Jonny and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to another episode of the Cash Flow Chronicles. I'm your host, Jonny Catani. I hope everybody's having a great week. Hope you guys had a great weekend. We are rolling right through June. I think last week I said it's going by slow, but it's officially starting to hit that phase where, we literally have 2 weeks left, week and a half. And then we're right in July, and it's my favorite holiday of the year, which is the 4th of July. It's a hard one to beat, it's everybody, I know there's people out there who aren't stoked on America right now, and I'm included there, but something about the 4th of July, man, just brings everyone together. Everybody's got the day off. It's the middle of summer, so it's always warm. It's hard to beat, everybody's barbecuing, everybody's having a party. So I'm stoked for that. But last weekend, I was in Moab in the LaSalle Mountains for a wedding, which was absolutely beautiful and magical. And shout out to Brittany and Taylor. Congratulations, you two. And thanks for letting me be part of the celebration because it was amazing. So we are rolling right along with our market research tips and tricks, how we're doing it, what to do, where to look. So before we get into it, today we're going to talk about I'm going to bring up 3 main data points that I like to look for in my market research. There are more, but these are kind of the 3 big ones to really look at. And the good news is that you really can gather all of this information from the free resources. If you want to learn about the resources, I talked about them on last Wednesday's episode. So go listen to that episode. I believe, if I'm not mistaken, that was episode number 300. Yes, it was. That was episode 300, last Wednesday, the 14th. So go listen to that one if you want to read about where, or listen to about what resources, where to find them, especially the free ones. I mentioned my favorite one and, where you can get really free insight. And honestly, as a passive investor, especially starting out, really, it's going to give you all the information you need. And, if you want to dive deeper, then, I talked about some paid resources as well. So before we get into today's episode, you guys, really easy. It's the same exact name as the podcast, thecashflowchronicles.com. Go there, sign up. I've got a 5-step video series that is coming out. I'm very, very excited. We are going to cover mindset. I'm going to give you the lingo, right? In order to know how to analyze a deal, you've got to know what all the lingo means. And not only to analyze a deal, do you want to know the lingo, but if you're going to be a real estate investor, you got to talk like a real estate investor. The way to talk like a real estate investor and talk to other real estate investors is to know the lingo, right? We are going to cover vetting a sponsor and, of course, the most important part, deal analysis. And there will be a bonus as well that I know nobody else has put out yet. So very, very excited about that. That is almost completed. So go to thecashflowchronicles.com, sign up there. That list will get it first before I launch it to the rest of the list. So let's get into today's episode. So the 3 categories that I want to cover today are economic data, job markets. Those are 2 separate, and I'll go over why those are 2 separate. And then demographics. For demographics, we're going to cover who and why. and I'll get into those at the end. So step one is economic data. Okay, so economic data is going to be broken down into a couple categories. One, you're going to have kind of inflow, right? So how many kind of net new net new tenants really is a good way to look at it, but really the inflow of new people to the city, right? So this is going to be renters, home buyers. Obviously, that's it, right? Renters and home buyers. In this case, we're going to kind of look at it, especially when you're getting it from places like Marcus and Millichap and the CBRE. It's going to tend to point toward a lot of rental data, but that's good because that's really what you want to be looking at anyway, right? So one of the biggest keys there is going to be rental growth. And rental growth is going to be related to two things, obviously inflation, right? And then also demand. Demand is going to be fueled by what? New people moving in. Also, along with that, which I talked about last week, is your absorption rate, right? So economic data really is going to be, how many new units are coming online, how much demand is there, what's the absorption rate for those new units, and all of that put together is going to help tell us if there will be rental growth or not, right? If it's going to stay stagnant and flat, if it's going to drop, right? Meaning demand is dropping. It could be demand dropping, could also negative growth could also be a negative absorption, meaning too many units coming online related to the demand. Economic data is also going to include things like infrastructure, right? What new systems and infrastructure is the city itself putting into place, right? The municipality itself. This is going to include new roads, new parks, business centers, right? A lot of cities will put in a new business hub where they're going to build all these offices, right, to attract, tech companies and maybe manufacturing, right? What kind of manufacturing are they bringing into place? Are they putting in infrastructure? Infrastructure is also things like reducing the hoops and or red tape for new construction, right? So economic data is going to include new construction, and not just for residential and apartments, but also for businesses and employers as well. So, which perfectly leads us to job markets. Now, the reason these are separate, even though I mentioned kind of business infrastructure in economic data, is because how I view job market is not necessarily the economic side in terms of, how many new jobs are being added, new people moving and needing a job. But to me, one of the big things to look at when it comes to job markets is sector segments. So one thing that's really key, and you'll see this on a lot of top operators, will have a section typically in the offer memorandum, and then they'll talk about it on the webinar when they talk about the city and the market and the economic data, is the job sectors. So sectors include things like, blue collar, tech communities, right? White collar, right? Lawyers, attorney offices, financial district or financial jobs, right? And business centers will include financial districts and attracting financial companies, right? Insurance, right? This is all going to fit into white collar. And then you're going to have things like, manufacturing as well. And manufacturing covers both blue collar, because you got people who are actually working in the plant. And then you've got the people who work on the plant, that are kind of your higher managers and directors and VPs. And the reason that this is important is because it's important when you're looking at job market data to ensure that you don't have too big of one sector, right? So for instance, I believe the last time I looked, and this may have changed, but Austin had like 30% of its job market was all tech. And as you guys have seen, Austin's starting to drop in terms of its rental growth. Now it's still positive, but rental growth is dropping because what we've seen is what? A layoff. We've seen a heavy layoffs, right? Which means that people could be ready to leave and go work somewhere else, right? Especially if, certain employers are getting away from so much remote work and starting to emphasize moving back into hybrid work, and more importantly, an emphasis on returning to the office. You could see people starting to move back to more tech focused hubs. Now, Austin is one, but Austin was more remote, I believe. And that may be changing, but you've got places like Phoenix that have a massive inflow of tech companies. You've got places like Salt Lake City have it. San Francisco no longer, right? We've all seen what's happening to San Francisco. So that one is different, right? Not so much a tech hub anymore. So for instance, to put it into perspective, CBRE, which is one of the free websites that I mentioned, they are a broker, but also do, a lot of blogs and insights and market research, just like Mark Similichap and some of the others that I mentioned last week. They just did a top 20 markets forecast rent growth Q1 of 23 to Q1 2025. So over the next 2 years. So to put this into perspective, their top three, let's just say their top five: Nashville, San Diego, Cincinnati, Indianapolis, and Newark, New Jersey. Never thought I'd say Newark in one of those. Austin, not even on this list. Okay. So, and the rent growth isn't much. It's, we're seeing 6.8% for Nashville and 6.7% for San Diego. So that over the next 2 years is what's leading, right? And some of you are like, holy cow, I can't believe that's what's leading the forecast when we're just coming off of, 15, 20, 25% rent growth over the last, 2.5 years. So that goes to show you why a heavy focus in one job sector is not good, because Austin isn't even on this list, which means a lot of people are probably on their way out and looking for tech jobs elsewhere because the city is so expensive. And, if they can move to, a little bit more affordable city that can provide them the same amenities, and your job is remote, or you get a job in a city like Cincinnati, Indianapolis, Kansas City, right? Some of these places that are putting a huge emphasis on infrastructure to really attract these new jobs, why wouldn't you? And in talking to people, a lot of people are really starting to get back on board with wanting to go back into the office. So a lot of these places, or a lot of job prospects, people who've been laid off in the tech community, are willing to go and move to a new city and go back to an office. So that is a major factor when you're doing your market research, and why it's important to have a diverse job culture. And that is why I wanted to make job markets and job sector and its own section, because I wanted to make that emphasis about why it's important to have that diversification. So there you have job markets. Next, we're going to talk about demographics. Demographics is going to be who and why. Okay, so we've kind of talked about the why, right? Biggest reason, typically the biggest reason is going to be job first. And then you're going to have things like education, right? Which is going to also tie into, family, starting a family and family growth and things like that, right? Because obviously once you start having kids, you want them to go to a good school. And so it's going to matter where you live. And some of these cities that have the top, school districts could be very expensive. So if you're looking at school district rating, they're rated from 1 to 10, right? Typically, when you're in the A class, you're typically a 7 or higher, right? And so what you're looking for is you're looking for who and why. So the biggest thing is, the two biggest groups of renters right now are millennials and Gen Z, right? For obvious reasons, because buying a house right now for first-time home buyers is extremely challenging. And so it's important to note what demographic is moving there and why, right? So if you have a heavy millennial inflow, you can bet that eventually what will happen is you will start to see one of two things. So for instance, one of them is COVID had a big inflow of millennials being able to work remote and live wherever they wanted. So you saw cities like Salt Lake City, Boise, really start to blow up in terms of, access to recreation, places like Bozeman, right? Access to recreation that you wouldn't get in other cities, but because you could work remote, you go live there, sign a 1-year lease and live there for, really pennies on the dollar compared to living in places like, Austin, especially places like California. That's the biggest one. Even places like Texas, right? So what's starting to happen is, especially in places like Boise, is getting crushed with people now leaving in order to go and follow the tech jobs or whatever industry they're in, and realizing now that they're ready to be back in a city as opposed to necessarily maybe around some of the recreation. Now, one thing with Salt Lake City I talked about last week is you're starting to see a bit of an outflow because, Gen Zers now are again, we're starting to see an emphasis on hybrid work and return back to the office. And so it's starting to negatively impact rental growth. Now, cities like Salt Lake City over the next 10 years are still going to have a positive growth. And, you really shouldn't worry over the long term. But when it comes to your market research and determining what cities you want to invest in, it's important to understand the full scope of it. I'm not saying that, you shouldn't invest in a place like Salt Lake City or a place like Boise. I'm just saying that, maybe it's important to look at other cities, especially with the Midwest, starting to top some of these charts for forecasts over the next couple of years. And asset prices are still relatively low in those cities, meaning you're going to get a really awesome opportunity for cash flow in cities like Indianapolis, Columbus, Cincinnati, Kansas City, Louisville, cities like that, right? That have been relatively affordable, but always steady. So those are kind of the things to look for. And the who is important because, one thing with millennials is, like I mentioned, so now millennials, starting to transition towards starting families, which means that eventually they're going to really start to trend toward buying homes. And, home prices are still relatively high, but they are coming down in a lot of places. And so what you'll start to see is the millennials transition from renters to home buyers. And then, the Gen Z will fill in. And then I believe Gen A is after them. That will fill in after, right? And so it's important to understand who's moving there, because if you have a heavy inflow of millennials, then that could be bad for the longer term because eventually they're going to transition to home buyers. So, as they start a family and want to upgrade and increase the space that they have. So there you have you guys. That is the basics of market research. It's really not that challenging, right? And all this information can be found for free on the various, websites that I mentioned in last week's episode. Like I said, Marcus and Millichap is my favorite. CBRE, another great one. One of the articles I referenced today, top 20 markets forecast rent growth over the next 2 years. That was a CBRE, free, right? Didn't even have to sign up to be on their list. So there you have you guys. That's the very basics. And honestly, even knowing that basic of information, which would really take you, probably 30 minutes per market to really dive deep and understand all of these different data points, so an hour of your time, you get 2 markets, right? So then that gives you the preparedness when you go into a webinar to understand, what's happening in that market, so that, if something is either not in the webinar or they have a data point in there that conflicts with what research maybe you've done, you could bring that up and understand where they're getting their information and their insights to ensure that they're not overinflating and just showing you what you want to see and what's going to make their deal stand out better. So there you have you guys. That's today's episode. Really quite simple. I hope you guys enjoyed it. I always enjoy being able to deliver these insights. So let me know if I missed anything, if there's something else you guys really look for in your market research, right? I know a lot of you out there are very experienced investors, may have some other things that you look for in your research. So let me know. So thank you guys so much for listening. Again, thecashflowchronicles.com. Sign up for my list. Oh, hint, hint, I've got a new deal coming soon. And also follow me on social media at Jonny Cattani. If you do follow me, I know that posting has kind of fallen off, but a big focus moving forward is getting those systems and processes in place to really build and start delivering a lot more value. So thank you guys, as always, for listening. I always appreciate it. And I look forward to talking to you guys on Wednesday. Today is Wednesday. I look forward to talking to you on Friday for the Friday follow-up. And of course, continuing next week. And we could possibly have something very special for you next week. Hint, hint. Okay. Thank you guys as always. And I'll talk to you on Friday. See ya. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CattaniCapitalGroup.com to learn more.